Here we are on the New Zealand dollar 60-minute time frame, and this is a trend continuation trade that I've just got in. It's only offering a 1-to-1 risk to reward target ones, but because target 2s are quite achievable here and favourable, I've entered in the trade. Usually I wouldn't enter in a trade with anything less than a 1 to 1.5. But what I'd like to do is just remove the orders and just run through the high time frame analysis and tell you why I'm looking at this for trend continuation. And there's two reasons. But first of all, let's have a look at the dailies. And here on the daily time frame, we are in trend, as you can clearly see. New structure low, outside return, new structure low, outside return, new structure low, outside return, new structure low, outside return. Now, importantly, we have had quite a deep retracement into our outside return, and we didn't make much of a new low. And as you can see, the difference between the new structure lows has been getting smaller and smaller, an indication that we're going to see a rotation. So I'm going to be very limited here on where I'm looking for targets. I certainly wouldn't be shooting for anything past this level. I don't think my targets are that far down, but oh yes, I think they are actually. So what I'm just going to do is I'm just going to make this green, and this line was the actual close of the daily candles. So here we are on the 240, and again you can see here we're in trend, new structure low, outside return, new structure low, outside return, new structure low, looking for an outside return. And you have to ask yourself, why have I sold at this level when really we could sell anywhere up here and get a better risk to reward? Well, if I delete these off and drop down the time frames, I'll be able to explain why I sold at this level. So there are a couple of reasons. Here on the 60, we can have a look that we're in a smaller trend within this trend. So new structure low, outside return, new structure low, looking for the outside return. Now, if we put the structure level in here, in fact, I'm just going to put a line in here, you can actually see that we have come into it and we had a lower low, lower close. So we're in trend, we're looking for a lower low, lower close where we have a risk to reward which is in our favour. Now this has only offered me a 1-to-1 risk to reward, but what it has done is I've actually got involved at the just above the 6600 psychological number, and on the 240 we've not closed past that. If we have a look left for the structure level, and I'm just going to remove these VS1s, you can actually see that we've come into it here, here. We did have some more. Here's one right here and there as well. Is there anything else further left? I think that was it. So it's a structure level that's also been respected, as well as it being resistance for this structure level in trend continuation. What we also had, if I remove these off, is we had a trend line which we were following down quite nicely. And if I do that, you can see there 1, 2, 3, 4, 5 tests. And again, we had the lower low, lower close. So we've got two levels of structure we've come into here. And at the cross, we've got a lower low, lower close. And if I just go to the 240, just to show you what I meant by that we've not closed above that 6600 even-handled number, you can actually see it right here, and there's the 6600 even-handled number. So we're coming into the wicks here, and so this is on the 240 an early place to get a trend continuation trade, but you can see here with this falling trend line here that this is quite a good area for targets, for entries, sorry. So if I bring on the entries, again this is just a 1-to-1 risk to reward here. So that's going to be the risk, and I'm going to make that red. This is the reward, because it is trend continuation. Targets are a retest of the lows. And we're looking at green, and then I'm going to do yellow for target 2s, which is really where the pips are in this particular trade. So we're risking 23 for, it is actually 23, I'd check this, 23, there we go, and target 2s are 49. So there we go, there's no other confluence other than everything that I've been through here. Stops go an ATR above the previous outside return, so that's put my stops at 66.20, well above that 6600 even handled number, and we will come back and see if this trade wins or loses. And we're back. We have now hit target ones on this trade for 23 pips. We're still holding for secondary targets. What we are doing just at the moment, if I can fatten this up, is right here we did close below the most recent low, giving us a break below, close below, indicating we are going to go lower. But recently, last couple of hours, we put in a rejection candle followed by a higher high, higher close, giving us a 3-bar reversal. So we may see a pop here to the top. It may actually come all the way back up to retest the trend line and then come back down. I don't know, but right now I've moved 1 pip past break even, 2 pips past break even, sorry, and so this is a winner at least for target ones. And we're back, and we have now actually hit my buy limit order. The hourly candle has just closed very bearish, so I am expecting shortly for us to come down that what was less than half a pip now to hit targets. And there we go, targets have eventually been hit on this lovely 2-target winner trend continuation trade. As always, if you haven't subscribed, go ahead and do that, and please give the video a like as well.